And welcome to today's episode of Derek Invests. I'm your host, Derek Miller. It's good to see you all. So today, number one question I'm getting, like across the board, is technology has been hit so hard. Is now the time to buy? And I'm getting these questions from random people that I don't work with. I don't know. I have no idea what they've done in the past. They think that that's a very easy, straightforward answer, but I don't know what they own now. I don't know if they're buried. I have no idea. So, what I'm going to do is just approach one of the three pillars that you should fully understand about yourself and how to have very set rules so that that question is never asked, which is risk management, cash management, and investment management. What we're going to do right now is we're simply going to work on the investment management part. After the drop in stocks yesterday, I've gone over several times what a legitimate fall from a high price looks like versus what a giant price moves down to invoke fear in you to get retail, the less knowledgeable, the trend followers, get all those guys selling. What that looks like. So the real thing versus, I always talk about EQ, emotional intelligence. Emotional intelligence is built when your logic and knowledge outweigh your emotions. And many people that invest have this idea. I'm a surfer. So it's funny how I have to get better at that. I break my conversation. Some people have the idea, and I'm a surfer. So what I was going to say was some people have this idea that I'll learn as I go. All right. And here's the problem with I'll learn as I go. And everybody will grasp the concept, whether you surf or whether you don't. I live on the West. I love surf. And in fact, bigger surf, better, not giant monsters. I'm 45 years old. I don't need to get my arms and legs ripped out in 50-foot waves. Probably the biggest I do now is, double, triple overhead, 15 feet, 16 feet. And I haven't surfed in those in 5 years. But let me give you let me give you a frame of reference when it comes to investing. So people tell me, I'm going to learn as I go. I'm just going to throw this little 2000 in. I'm just going to fool around and figure it out. That's the same thing as you telling me, Derek, it's El Nino. There's huge waves out there. I'm going to go learn how to surf. And I say to you, okay, great. So do you know how to swim pretty well? Well, no, I don't know how to swim. Well, okay. But you've surfed before. No, I've never surfed before. Okay. Why do you think that's a good idea? Well, this is a flotation device. That's your YouTube, your Twitter, these financial guys you follow that are giving investment advice all the time. They're my flotation device. They'll make sure I don't drown. Would you ever in life do what I just said and paddle out into the Pacific Ocean? I don't care if it's 6-foot waves. And by the way, 6-foot waves, if you've never surfed before or been in the Pacific Ocean, would terrify you. The power of the ocean is an amazing thing. It's a beautiful thing. And I compare the market to the ocean because it's ever changing, it's powerful. And if you don't know exactly what you're doing, you're going to die in it. All right. And so when someone asks me, well, tech is falling a lot, should I buy it? That's this, and I ask you a few very basic questions, and you don't know the answers. What you're telling me is, I'm going to figure it out as I go. I'm just going to paddle out. It's just no big deal. I'm only taking $2,000 with me. Okay, this is not an intelligent way to approach a very complex, dangerous, fast-moving, ever-moving, challenging environment. This is a terrible idea. All right, which is why my mentorship course exists. For those of you that what I just said resonates with you and makes sense, I start my mentorship course in 2 weeks. I have 4 participants already. 4 people have signed up. I have slots for 6 more. 6 more students to take on. We do education twice a week. I have time slots twice a week for the education. We do Q&A twice a week. You get notes on every single session. And it can get pretty personal in that I help you build out your risk management, investment management, and cash management profile so that you can set up some rules for yourself. And then once that's complete, typically you'll end up following me, and you get weekly updates as to exactly what I'm doing in each of my 3 portfolios. So if what resonated with you about surfing and not just saying, I'm going to figure it out as I go, my mentorship course is a great way to get yourself started and structured. There's no shortage of information on the internet, folks. I can give you all the information you want. You want to know the biggest buyers and sellers on Wall Street. You want to know when that stuff's happening. You want to know where all the orders are for market makers. You want to know where big orders lie in retail. It's easy. I can show you it all. But if you don't have that stuff structured and set up in a system that will keep your emotions from overwhelming your logic, that information's all useless. Information is just information. It has to be structured into a system that works for you. And that's what I help my students do. Now, with that in mind, here's my email address, dmiller@prometheaninvesting.com. There's my Twitter. Some of you are probably watching this on Twitter. Derek Me 752-636-05. And then my LinkedIn is Honest-Trader. All right, everyone. So with all of this stuff that I just said in mind, and I mean all of it, and that's not that is not hubbub, believe me. I could use a million references if you want, right? All would have to have pain infliction, because for those of you out there that think you're following trends and think that you're going to use moving averages and Fibonacci and what else, RSI and Bollinger Bands or whatever it is, how did yesterday treat you? All right, yesterday was your red flag, by the way. If you're out there right now and you're investing your own money and you're trading, you think you know what you're doing because you've lived through one of the longest bull markets that we've ever seen. Yesterday was just a signal to you. Hey, maybe I don't. Now you can accept that signal, and that was very little pain yesterday. That was absolutely nothing. Nothing. Now, what we're going to do is we're going to go through and start taking a look at some tech. We're going to look at a couple asset classes, and we're going to try to make sense of what happened yesterday and what do we do moving forward. What are the things to buy? How can you avoid yesterday, which really, I hate to break it to you, was very, very easily avoidable. If you didn't avoid it and that doesn't resonate with you and you think that that's not possible, you should look back at my Twitter feed, where I do not ever delete a single post. Never. I never delete a post. I put up all my live videos and all my charts, and it'll show you that as the market was rising, I am buying certain things and I am selling certain things, meaning I'm going long and I'm going short. And I do that in every market, and I do it all the time. And that is what protects you from days like yesterday. And also, by the way, go look at my shorts through this entire rising market and tell me that I'm not making money shorting. I am. And guess what? I'm making money going long as well, because we're in a rising trend market, and we still are. But when days like yesterday hit, I get to smile because my shorts absolutely explode. And the money on the short side is incredible. And then on the long side, because I know what I'm doing, I realize that I can start scaling into my longs a bit more. Right? I don't rush in and I don't rush out. You have to scale in and out of positions, and you should be doing that on the long side and the short side at all times. That is how you protect yourself from risks like yesterday, which are going to become commonplace, by the way, with this new trend following AI, machine learning society that we're living in. Yesterday is going to become very common. It's going to become the normal. So if you don't know what I'm talking about, you better reach out to me and let's get started, or don't if this strikes you the wrong way, because I like my students to like me and I like to like them. So if this strikes you wrong, I understand, not a problem. You can keep watching my information, but information without structure and systems and how to use that information, even my information, is useless, because you won't know when to scale in, how to scale in, and that's all based on you. So anyway, I'm talking too much. My information was just up there. Here it is one more time for you. Derek Me 752-636-05. That is my Twitter. Never changed my Twitter handle, but I did verify it. Here I am, so you know I'm me. My LinkedIn is Honest-Trader, and email me dmiller@prometheaninvesting.com. All right, everybody, let's get started. So what's something that we want to take a look at? Well, we're going to go ahead and take a look at 20-year treasuries, which I've been telling you for the last 3 weeks have been a monstrous buy. My price point where I was totally in was 91.80. I started selling some off yesterday. It reached nearly 100. And so I started selling off some of those treasuries. Again, you're always scaling in and out. You're never just buying and selling, right? But I was fully scaled in at 91.80. And yesterday I started scaling out. That was big protection yesterday. The other thing you want to do is you want to look at stocks that have already taken a beating, a huge beating, right? On the downside. So right now, if you look at yesterday and you look at things like NextEra Energy, which I've been following, you can feel free to go look that up. CrowdStrike, which I've been following, feel free to look it up. APTV, which I've been following, feel free to check me out. Those things didn't even fall yesterday. In fact, I think they were all in the green. Not crazy, just 1% or so. But while the rest of the world was getting hit, those were in the green. Why? Because they're already beat down. Then we're going to take a look at some AI stuff like NVIDIA. I don't know if we'll get into semiconductors or not. We'll look at the indexes themselves because there is an interesting intersection of the S&P and the NASDAQ. If you understand how markets move, you understand the leaders lead and the laggers lag. And when a leader moves in a downward direction and it's less than the lagger, that means there's strength within the market. The leader still has the strength, which means you're still technically in an uptrend. And not to give it away, but we did see that yesterday. The NASDAQ was down 5.5% to start the day. The S&P was down 3%. They both finished the day down 3%, which actually means for the NASDAQ, that was positive. It looks like there's going to be a gap up this morning on the NASDAQ. I'm not sure about the S&P. I think it's a small gap up. If that gap fills and reverses, that is an incredible piece of information for the QQQs to run back to 490. That means there is health on this upside. If you watched my yesterday, I did 3 live streams yesterday because I knew people were concerned, and I am, after all, here to educate and help. And part of that is emotions, which is what gets in the way of most investor success. Investor and trader are interchangeable terms to me. I don't care what you call yourself. They try to make investor sound more sophisticated and long-term, and trader to sound more short-term and gambling, but that's just not the truth. They are both a very different grind that have very different results, but both take equal amounts of knowledge that are very different. It's taken me 25 years to understand both of those methodologies. I can trade long-term, intermediate term, and short-term. Any of those to any length of time that you want, as well as I understand how to structure and manage individuals' portfolios across different asset classes, which most don't. They're defined by an asset class. They are defined by a time frame. What I do transcends those things, and that was not quickly learned. That was 2.5 decades of my life. That is not short term. That took me a very long time to learn, and the information that I give out is valuable, and I don't see anyone else anywhere doing what I do, which does not surprise me. It was a lot of work and sacrifice to get here. So let's jump over. We discussed the NASDAQ and the S&P. Let's go ahead and just take a look real quickly at what type of trading activity was yesterday. I believe both of those indices were up. Both of those indices were up 100% in volume, as you can see. Largest volume bar. Let's go to a weekly. Yesterday was only one day, and it was a Monday, so it's not going to – I mean, it's still – look at that. It's still – yesterday exceeded the last, 10 weeks in volume. One day exceeded the last 10 weeks in volume. Now, if you think that what that is that's all if you think that's just all selling, that's primarily buying. That means a lot of people bailed yesterday. No matter what anyone tells you, I'm telling you, and I've been doing this for a very long time, that there was a ton of sellers yesterday, a monstrous number of sellers. Now, let's keep volume in perspective, though. That's volume. This is not crazy outrageous. On a daily chart, it is barely higher than last fall. Look, what's this day here? This is October 26, 2023. Volume was high yesterday, but don't get carried away. But for July, that's a monster. That's a monster day for July. But October 26, 2023. And there's half a dozen bars on here. Far more than that. I mean, it's almost like, look, what's this? April 19th, 2024 was really close to yesterday's volume on the Qs. So trading activity was not through the roof yesterday, although compared to the last couple months, yes, it very much is. They hammered price off of a high, which is always, or primarily, mostly 95+% of the time. Actually, I don't believe 95. It's 99.9% of the time used to elicit fear from the less knowledgeable hands that are playing in the market so that buying can occur. 99.9% of the time, that's what it is. In September of 2008, for example, the first crash didn't take place till the market was down 22%. How long did it take the market to fall 22% back in 2008? Over a year. It started in February of 2007. The crash did not take place until September of 2008. That's 18 months up at high prices before we experienced a crash. So for those of you comparing this to 2008, there's a little history lesson for you. How do I know that history lesson so well? Because I lived it. Because I was bailing out of the markets in fall of 2007. And then it was, even though you'll look this up on ChatGPT or Google and it will lie to you, it was actually March or April when AIG, the biggest insurance company in the world, announced that they were going to file for bankruptcy. And that was when I knew that the world was about to feel pain like it has never felt before. And I was out of that market. I was out of there. I didn't experience that crash. But it's funny because history books say that AIG didn't go bankrupt until like September of 2008, or didn't file for bankruptcy, or didn't admit they were going bankrupt or whatever. And that's just not true. It was March or April of 2008. I mean, there were a million warning signs. And right now, the only warning sign you see here is a warning against machine trading and AI trading. That's all this is a warning for. Things can pick up speed and crash fast when you have systems that pile on top of each other. I mean, that would be the same thing as saying, hey, look, when you're traveling down the road at 60 miles an hour, if the gas pedal gets pushed to 65, all of a sudden the 4,000 drivers behind you start pushing on their gas pedal. Well, that's going to start shoving you down the road real fast. You'll hit 100 before you know what happened. Okay? That's what this is. That is what machine trading and AI trading will lead to. So you have to manage money very differently now. You have to manage your assets very differently now. You have to always be a buyer and always be a seller, because things like yesterday, anybody who says yesterday was like something that you could say, hey, we're going to have a major, 5.5% gap down on Monday. Even on Friday, I would have called you crazy. Now, I was planning for the market, and by all means, please go check me out. Last Saturday, I had my level set on the Qs at 450, which yesterday I think it hit 425. Right now, it's what it closed yesterday, 435. So 15 point down, 2.5% below what I called for. So nothing shocking to me, right? Nothing at all shocking. And in fact, this market has the ability to go much, much lower than we sit now. But markets don't just collapse, folks. And that's what you have to remember. Markets don't just fall and then just keep plummeting, because the people that run markets want to sell out at high prices, not after markets have fallen. In any case, treasuries, let me show you something. For any of you out there that say that, well, treasuries, we didn't know to pile into treasuries. If you didn't know that this is an indication that everyone in the world that runs money was piling into treasuries, well, that is your fault. Oops. There we go. There we go. See all that trading activity? Now that's big trading activity, folks. That's a month. Look at that. What is that? 300% higher than even the fall? I mean, this right here is just buying like you've never seen in your life. So what does that mean? That means a couple of things. That means you can count on interest rates falling. It means that is U.S. Treasuries a flight to safety? Traditionally, it is. Is there a plan for something big to happen? Right now, I would say no. I would say that treasuries have fallen enough and rates have risen enough that the expectation is that that treasuries are going to they're going to rebound significantly. I mean, you have to understand this: the 20-year treasury, it fell from 170 to 180 down to $80. All right, it's going to rebound. So this is a buy into treasuries. So this is also something that if you were paying attention, which I always am, I am always looking for where the footprints of the large institutions, are identified by the trading activity on a chart, the amount of volume on a chart. When it stands out, there's only one group of people that can do that. One group. And that's the group that runs this stuff. And so those are the people that I follow. Those are the people that my students follow, because that is where the cash is. If you dump cash into any investment, into any asset class, I don't care what it is. I don't care if the asset class is beach chairs. If I dump enough cash into it, beach chairs will go from $20 a chair to $20,000 a chair, regardless of the asset and regardless of its value. So I am only interested in trading activity, which signifies cash flow. And for those of you watching, you should be doing the same. And if you don't know how to do that, you can keep watching, sign up for the mentorship, or take it a step further, which is what I actually advise everyone to do, which is one-on-one sessions, because this stuff is very personal. Now, we get pretty personal in my mentorship. I don't allow more than 10 participants. As I said, I have 6 open slots now. And hopefully some of you out there realize that, like, look, I am interested in doing this. I do want to trade and invest, because that is how the smartest people in the world attain the most wealth. And I am not foolish. I want to be part of that. Hopefully you did realize that. And maybe you also realize that, look, I guess I don't know what I thought I knew. Now, let me ask you this with Bitcoin. What do you think that is? Now, listen to me. This is behind you. This is July 30th. Look at the activity on July 30th. Look at that. That didn't stand out to you? It didn't? You didn't realize something big was on the horizon? Really? Okay. I mean, that's your call. That was last week. And I was warning for this in Bitcoin. I was warning crypto about this. Look, the same indicators in the traditional markets show up in the crypto markets for a reason. Do you know what that reason is? It's the same players. It's the same players. This is a new asset class, but in 3-4 generations from now, this will be the asset class. But for now, there's no regulation, and they can rain down terror and manipulation and make a lot of money doing this. And by they, I mean institutions, big money, and they're going to, and they are. So you better learn how they work and how they move. And if you don't know, and you're watching this and you are someone that's into crypto, I assure you that my crypto students will outperform any hodler or anybody just guessing at the next shit coin all day long, every day. And I can help you do the same. But yes, yesterday was easily identifiable in the crypto world. And guess what? This is one of the main reasons you were able to know to be short in the equity world, the traditional finance, the stock exchange world. When you start seeing stuff like this over the crypto world, which really at this point is just another asset class. I mean, even BlackRock's in on it now. Fink, the CEO, the guy who runs the freaking world, he owns a piece of every part of the world anyway. Even he came out and said it's a legitimate asset class now. And so that means he already owns a lot of it. That also means you should be very afraid, because when guys like him tell you that you're legitimate, that means they want it. Keep that in mind. That means they want it. Let's see here. Where are we going to go? Let's check out NVIDIA. It's just filled the gap that I'd been discussing for weeks. That's all it did. NVIDIA was destined for 95. That was nothing was ever going to stop that. It filled that gap. So this could be a very good time for NVIDIA. I'm going to do another market outlook today, but I can tell you this. If someone asks me whether or not the markets look positive or not, yes, they do. Was this a buying opportunity? Yes, it was. Is there a chance that it could go lower and that you should be scaling into your positions? There sure is a chance that it will. I don't believe things like NVIDIA will, for example. It has come back now, and in one day, let me pull up a weekly. I just want to see how much volume was on yesterday, how much trading activity actually took place. Oh, not nearly as much as the general markets. Okay. Um, this was NVIDIA. Let's see. What was this low price? 90.69, which I had said NVIDIA was destined for 95. There's nothing you could do about it. The high was 103.40 and the close is 100. I mean, yesterday was definitely buyers pounding into NVIDIA. I would say this is a buyer's market overall. It looks like there is strength in AI. It looks like there is strength in tech. It looks like there's strength in Bitcoin. The laggards, such as the S&P, have some catching up to do. The Dow has some catching up to do, but they're the laggards, not the leaders. So this is very much to be expected. The markets look like they're carrying a lot of strength at the moment. Does not. People were talking about circuit breakers and stuff yesterday. I don't see anything like that. Nothing that even resembles a reason to worry about any circuit breakers. Hold on, I'm gonna switch seats so you can see my face for the close of the show here. There we go. The sun's coming up, so when I sit over there, I turn into a shadow. In any case, I don't see any reason for that. The markets look like they're showing strength. Remember, though, you carry three pillars when you invest: cash management, which that's how much cash you keep on hand. And in markets like this, carrying 50% cash is quite normal, quite expected, and a very good idea, as you saw yesterday. Risk management. Okay, how much risk are you taking on? What's the upside of this position? What's the downside of this position? Anybody telling you only about the upside and only about the downside, and they're not buying and shorting in every market, is a useless, I mean, primarily useless, unless you're using them just for that tidbit of information. They're not as useful, for example, and that's definitely, they do not have a system in which you should be managing your money. They are a piece of information. How to manage your money is far more complex. And so that's risk management, right? What investments, what's the upside? What's the downside? How am I managing that risk? How am I diversifying that risk? How am I spreading that risk out? When I say diversify, do not confuse that with asset allocation. That is a ridiculous, antiquated, false model that basically allows the financial industry to get paid on charging you percentages for assets under management when they don't even manage anything. And then finally, you have investment management, which is what we were discussing today. What should you own? What do investments tell you about the market in general? You would better know whether your indexes look strong or weak before you're buying individual positions. Okay. The one I talk about buying and shorting in markets that rise, that's very technical to be able to pull that off. That takes a lot of years of experience. That takes thousands upon thousands of hours behind a computer. They say you're a master in 10,000 hours behind a computer. I have probably spent 50,000 hours watching markets. So just keep that in mind. All right. Hey, listen, thank you so much, everybody, for joining me. Remember, if you're not good up here, you're not good anywhere. Okay. If you're having a rough day, if yesterday felt hard, use that as a red flag. Don't lie to yourself. The worst thing you can ever do in life is lie to yourself. Be honest. I got caught. I never saw that coming. Oh my God. I sold at the wrong time. These are all red flags. And it just tells you, hey, I need to find the answer. And maybe you don't think I'm the answer, and that's fine. But now at least you're admitting you need to find the answer, right? So listen, get outside today, smile, go for a walk. Hey, fake it till you make it if you have to. Fake it till you make it if you have to. But you haven't failed yet. Why? Because you're here. You're still here. You're still watching. So I don't believe you're going to fail now. Always remember, every day above ground's a good day.